Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame bullish scenario where we're looking for an ending diagonal 5-wave structure to the upside to then finish a higher degree wave 5, after which we expect a bigger move towards the downside. In an ending diagonal, all of the waves have to be zigzag family structures, either a simple zigzag 535 ABC or potentially double or triple zigzags. And John was the first one over here in Discord that showed this scenario after looking for this 3-wave structure ABC in the yellow wave 1, then looking for 2, 3, 4 and 5, where in the higher degree wave 4 he's looking at this triangle over here, and the triangle is definitely a good scenario to end this wave 4, looking for that diagonal in wave 5. But what I don't like about the triangle is this wave E to the downside. If we look at this wave E, the final wave of the triangle here, then it looks to be a double zigzag in an ABCW, then a corrective X, and then you have another ABC to the downside in a wave Y. And a double zigzag in a wave E is incredibly rare, as most commonly in a triangle, more complex structures appear in a wave C or a wave D, with wave E most commonly being a simple zigzag, or also less common, being a triangle itself. So this is not really what you want to see, lowering the probabilities a little bit for that triangle. If we look at the ending diagonal, the most common target for a wave 2 in an ending diagonal is the golden pocket to the 786 area, sitting between 36.5k and 36.1k, where we also have some additional support, the blue box over here, 36.3 to 36.5k as additional support around the golden pocket area, after which we then want to see continuation to the upside in a wave 3, which then also has to be a zigzag family pattern, either a simple zigzag, double, or potentially even a triple zigzag. If this is the low of your wave 2, then it's made on top of the 382. The 382 and the 05 are less common targets for a wave 2 in an ending diagonal. And also, if this is your low and you're looking for a wave 3, then your most common target for a wave 3, pulled from the low to the high of 1 to the low over here, is between the 786 and the 886, which is between 38.6k and 38.9k. But that also needs to be then a 3-wave structure. And if this is your wave A, you still expect a bit of a retracement in B, and then you get a C, then this C has to be extremely extended to reach this area because A is so short. So this over here with wave E in a triangle, wave 2 not retracing to the golden pocket to the 786 yet, and a potential very extended wave C to the upside if we want to reach this area, lowers the probabilities at the moment for this particular scenario. Now if we zoom in to this structure over here and the explanation of a wave 3 to the upside, then this is what I meant. So if this is your wave A to the upside, right over here, we have 5 waves to the upside in this particular scenario, then looking for a corrective structure to the downside and then a wave B, then currently the fibs for wave B are visible over here, and these are all common targets for a wave B. So the 382 sitting at 37.2k all the way to the 886 at 36.9k. But if we're still looking for a wave C that goes all the way up to the target area of a wave 3, then preferably you need a balance at like the 382 maximum the 05, because you want to have a very long C to the upside, and the deeper wave B retraces, the lower the probabilities of that ending diagonal scenario. Now, if we zoom out again and look at the low time frame or bearish scenario, then we are looking for a flat structure. So in this scenario, we have then a ABC to the upside in a zigzag, followed by a corrective structure, and then we're looking for another zigzag to the upside in wave B. So a double zigzag in wave B, where this double zigzag to the downside, which was the wave E of a triangle, is now labeled a wave A, because a double zigzag in a wave A is common, and that's absolutely fine. That's no problem. So then we have a double zigzag in a wave B that also works, where the most common target for B is between the 1.236 and the 1.38, sitting between 38.3 and 38.6k, after which we then want to see an impulsive move to the downside to at least take a couple of lows that we have over here. Now this target area for B also is in confluence with the golden target box here, 38.5 to 39k, so that is some nice additional resistance. And then we would be looking for a WXY double zigzag as mentioned in wave B, and that is why you see these fibs over here, the 0.618, the 121 and the 1.236. If this is your ABC and this is your low, and you're looking for another three-wave structure to the upside in an ABC, the minimum target is the 0.618, which is in confluence with this area. The 0.618 is a common target area. Most commonly, however, is this area, the 1-to-1 to the 1.236. But you can see it's quite far above the wave B target area. So that's actually not really what you like to see unless price is still creating a structure here that makes it drop a little bit further before continuation. In a double zigzag, you wanted this trend line to be broken from the low to this low here, which has now happened. And these are the fibs for a double zigzag wave X, where this is then your W over here. So zigzag number 1, then you're looking to the downside, and then you want zigzag number 2, where the 0.7 is an invalidation for a double zigzag. So if price would do this, then a double zigzag is invalidated. If we then zoom into this structure and see how we can get to this wave B area, then the first simple explanation is just an ABC to the upside, right? We have a three-wave structure. This is your first ABC, that is then your W. This is your second structure in a wave X, and now you're simply looking for another ABC to the upside, a little bit of an extended wave C, hitting the target area as just mentioned, before then a bigger rejection to the downside, right? Relatively easy scenario over here, where the invalidation would be taking this low. If price takes this low, I'm honestly looking for the blue target box mentioned earlier. But the alternative scenario here, which is increasing on me, probabilities are increasing as well, is this scenario here, where we then have a WABC to the upside, right? Three-wave structure. And then in wave X, you can have any structure. So in wave X, we can be looking for potential A, three-wave structure in a B, and then a C to the downside, which now means this relatively short A can get a B, and then wave C can perfectly fine take the double top, wick the double top, hit the target area for wave B, which is just above, which is here sitting at 38.1k to 38.2k, and then reject in a wave C to the downside. So you get an A, three-wave in a wave B, take the double top, wick the double top, potentially a swing failure pattern, grab the liquidity, close below, move to the downside for wave C, where then the target box here is going to be very interesting for a potential long opportunity, if we see what we want to see, for then a move towards the upside in then a wave Y, where you want to see a stronger wave A, then a retracement in B, and then a wave C, right? A solid zigzag, just like we had over here, basically a copy of this zigzag to the upside over here, to then finish that wave Y to the upside. So this is definitely something that I'm keeping my eye on. If we look at the support resistances in this area over here, price bounced perfectly on the 3-minute gap. Now for viewers that are new over here, the 3-minute gap was this one over here. So I really enjoy keeping an eye on gaps. We had a big push to the upside followed by a red candle. That's what you like to see. And then the low over here of actually just the next candle here, that is the high of your 3-minute gaps. And especially in trending environments, gaps can be very, very nice support and resistance areas, which once again proved itself over here by wicking into it, closing above on the 15-minute, moving to the upside, and also going above this support resistance area. Now for a wave B, if we're looking for a little bit of a drop to the downside, then over here we have another support resistance area, right? Support, resistance, resistance, or support, resistance, support again. So that is an interesting area for price to come back to, which is in confluence with, depends where you pull the fib of course, with the 0.5. Let me actually go here. So the 0.5 is also in that box. So a little bit of an additional confluence over here in that particular area. And we of course have CVD divergences as well here more locally. Bullish CVD divergences with the low made over here and this low, so higher low in price, lower low on the CVD. The target would be taking this high. More locally, throughout this move to the upside, we have consistently seen bullish CVD divergences building. Also more locally here, but of course, you know, we're running a little bit out of steam. You can also see it just looking at the structure, right? Might be something like this before then continuation over here, where after this high was made, you have a three-wave structure to the downside. This looks three-wavy as well. And potentially now we're looking for a bit of a retracement and possibly then a flat A, B, C, and then a continuation to the upside, which at the moment has the higher probability. If we also look at the bullish CVD divergences and the structure here, but we continue to observe. If we then look at the probabilities of the different scenarios, Then on the low time frame, the bearish scenario currently has the higher probability compared to the bullish scenario, which is the diagonal. So a flat scenario in an A, B, and then a wave C currently carries some higher probabilities compared to the bullish scenario, which is the ending diagonal scenario here. But generally, it means taking the double top, because that is what we're looking for in both scenarios. Bullish scenario, you don't want to see this low taken. You go for the double top at 38K, but also in the bearish scenario, you're also going to be looking for the double top at 38K, right? Making things simple. Now on the micro, we're also looking for the double top, but preferably based on the structures we have more locally, I'd be looking for this flat. I think it's very attractive, an A, B, C, so I'm going to keep my eyes open for a swing failure pattern over here as well. And weakness, of course. Make sure you trade is safe, have entry requirements, see what you want to see, and then potentially look for a move to the downside. If not, we're going to be looking for the yellow target box, of course, which then supports this area, but also of this or this scenario. But also in these two scenarios, we're also looking for the double top to be taken, and also in this one, the double top to be taken. So, you know, that's just generally an important level. Now, probabilities in order at the moment. Micro Bear 1 folder, this is the one that I currently mainly keep an eye on. Then we have the low time frame bearish scenario, right? Eventually just generally reaching this area, and only then comes the low time frame bullish scenario. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.